Hey everybody, today I'm going to show you 5 dividend bank stocks that I'm currently buying. They all yield at least a 7% dividend on the current share price. I'm also going to show you the criteria that I use to find these stocks, why I think they're a good long-term hold for income in your portfolio, and also the risk involved with these companies, which is why the dividend yield is currently high. There was a few criteria that I made sure that all these banks met. Number one is that they all had to be profitable. So all these banks actually make money. I don't often buy companies that lose money. Number two is reliable dividend payments. So these companies all have a history of making dividend payments on time and also increasing their dividends as time goes on. And number three is good dividend coverage. So these companies make a lot more in income compared to the amount that they're actually paying out in dividends, which leads to sustainability of the dividend long term. All right, let's get started with my list. Number 5 is the ticker symbol UBFO, and this is United Security Bank Shares. So UBFO is a holding company for United Security Bank, which is a regional bank based in California. They do all the typical banking stuff, deposits, checking accounts, and commercial loans and things like that. Let's go through some of the information about the stock. So the current share price is $6.74. The PE ratio, so the price to earnings ratio, is 5.87. The estimated dividend yield is 7.2%, and the market cap is 115 million. So this is a micro cap company. Let's take a look at the chart. I'm not too big into stock charts, but let's at least look at the past year. So you can see it's got a low of around $5.50 and a high of almost $8.50 back in February of 2023. But it's kind of always kept between this $7 range. It's gone like $1.50 down and $1.50 up. So it's kind of like right in the middle of that 1 year high and low. But what we're really curious about is the dividend. So you can see that it currently pays a 12-cent dividend every quarter. So every year you could count on about 48 cents in dividend payments for each share that you have. So they did just increase this last quarter from 11 cents to 12 cents. But what's really most important is the dividend coverage. So if you look here at the dividend payout ratio, the current trailing 12 months, which is what I look at the most, is 42%. This means that the current trailing 12 months, so they paid out, about 48 cents in dividends, but they just increased it. So it's really probably like 45 cents. That's only 44. So that 45 cents is only 42% of their net income, which means they still have a lot of room for dividend growth. And even if there is a drop in earnings per share, this company still will reliably be able to pay their dividend. All right, number 4 is the ticker symbol PFC, and this is Premier Financial Corp of Ohio. Same thing as the last one. The last one was a regional bank in California. This is a regional bank in Ohio, Michigan, Indiana, Pennsylvania, West Virginia. It kind of operates in that Midwest, Northeast region. Looking at a little bit more about the stock. So it's currently trading at $17.39 a share. The PE ratio is 6.68. The current estimated dividend yield is 7.06%. And the market cap is 621 million. So this one's a micro cap, but it's a little bit bigger. The last one was about 125 million. If we look at the chart over the past year, you could see that it's really dropped. So it's gone from about a high of $30 down to under $15 at one point. So it dropped over 50%. So we're really buying, at that low. And since it's dropped at around $14.50, it's climbed back up to around $17.39 where it is right now. So this would be hoping that we're buying low on this stock. So back in December of 2022, November, December, the dividend yield on this thing was probably around like 3.5%. So half of what the yield currently is now. You can see here the dividend has gone from 24 cents back in Q1 of 2021 all the way up to 31 cents where it is now. And we also see those consistent dividend payments over the past 2 years. So it's consistent payments and they're slowly growing, which is what we want to see. And we can even look further back. So this goes all the way back to like 2019, 2018, 2017, 2016. You can see back in 2015, it was at 10 cents a share. We're all the way up to about 30 cents a share right now. So you're getting about $1.20 per share in dividend payments each year because this company pays a quarterly dividend. But most importantly, before we get all excited about consistent dividends and dividend growth, we need to look at the dividend payout ratio and the dividend sustainability. PFC currently has a 47% current trailing dividend payout ratio. So that means that this dividend that they're paying is only 47% of their current net profit. So they can keep paying out this dividend even if profits do fall. This, in my opinion, is a reliable dividend. All right, next up, number 3 is the ticker symbol EGBN, and this is Eagle Bancorp. Eagle Bancorp is the holding company for Eagle Bank, which is a regional bank that operates in the Northeast, Baltimore, Maryland, around that area. Current share price is $23.42 a share. The current PE ratio is 6.36. It has an estimated dividend yield of 7.55%, and the market cap is $719 million. So each one of these is getting a little bit of a bigger bank. We look at the 1-year chart, it's kind of a similar story that we've seen on these other stocks. Right around February, which is when the Silicon Valley Bank stuff happened, this stock price really crashed. So it went from a high of, over $50 back in like August, September, kind of touching around between like 40 and 50, then fell all the way down to under 20 with a low of about $17, but it's since climbed back out of that pit up to around $23.42. So $17 would have been a great buy. But you're still pretty low compared to like historical prices. We look at the history of dividend stocks. I mean, this is a great chart. So you can see it's grown from 22 cents in the Q1 of 2021, 25 cents, 35 cents, 40 cents, 40 cents, 40 cents, 45 cents, to where it is now at 45 cents a quarter for each share that you own. This is a good, reliable dividend. You know what you're getting every quarter for each share, no matter what the stock price is. And you can see that this company has a history of growing their dividends. Now, they did just start paying a dividend in 2019. So in Q4 of 2019, they started with that 22-cent dividend, but they haven't cut it since. So it's not as far back as some of these other companies where you can see 20 years of dividend payments. This one has about 4 or 5 years of dividend payments, so it's not as far, but I think it's still decently reliable for the yield that you get, right? If you're buying these higher yield bank stocks, you're going to be looking at a little bit more risk. We'll go over that a little bit more later, but I'd still like the dividend growth of this company, and we'll take a look at the earnings too to make sure that this dividend fits in well there too. So the current dividend payout ratio is 48 cents, which means that so they must currently be earning around $1 a share for the past trailing 12 months. So that's pretty good. I mean, you still have some room to grow in the dividend. It might not double unless their earnings per share doubles, but you still have definitely that sustainability to where you can keep expecting that 45 cents a share for the near future. All right, let's jump to number 2 on my list, which is the ticker symbol KEY, which is Key Corp or Key Bank. Most everyone knows this. It's like a national bank. You'll see their bank locations probably around your town. We have a few here in Utah. So the current share price is $10.16. The current PE ratio is 5.99. So this is the lowest PE ratio that we've seen. The estimated dividend yield is 7.72%, and the market cap is $9.5 billion. So this is by far the biggest bank that we're looking at. It's actually the first one in the billion-dollar market cap, and it's about $9.5 billion. So this is the first bank that we looked at was $110 million market cap. This bank is, 90 times bigger than that bank. So let's look at the 1-year chart. Same story around February, March of 2023 this year. This stock crashed from $20 a share 50%. So it fell all the way down under $10 a share, where it's currently around $10.16 a share. This one hasn't really recovered that much. Some of the other ones we were looking at, have climbed out of that pit. This one's still pretty low. And you could see in March, things really heated up. In March, when Silicon Valley Bank failed, this thing completely crashed. So we're buying a lot of these banks lows. We're buying low, hoping that they, keep climbing, that the share price recovers, and that the bank itself survives whatever interest rate risk the financial systems are seeing right now. But we're here for dividends. So let's look at the dividend history. You could see 18.5 cents per share. It started at back in Q1 of 2021. We're climbing up a little bit, not as much growth as some of the others, but it's definitely still sustainable, consistent dividends. We're all the way up to about 20 cents a share right now. And that's even with the stock price falling as much as it has. You can go even further back in time to say 2015, and you're looking at like a 7.5 cent per share, 6.5 cent, 8.5 cent, and that's grown. So the dividend has, more than doubled over the past 10 years. And if we look at the sustainability, so this Key Bank has a dividend payout ratio 46%. So the past, that 20.5 cents per share per quarter, That's about half of their current earnings. So they should be earning around like 40 something cents a share. It's about 46%. So there's still sustainability. So we can expect this dividend to keep paying out as long as this company keeps making money. All right, and let's jump to number one on my list. The number one high yield dividend bank stock that I'm buying right now, and that's the ticker symbol TBNK, Territorial Bancorp Inc. Territorial Savings Bank is a bank in Hawaii. It's headquartered in Honolulu, Hawaii, and it's a business in the state of Hawaii. So Hawaiians use this bank quite a bit. The current share price of TBNK is $12.46. The PE ratio is 8.08. The estimated dividend yield is 7.38%. And the market cap is 111 million. So it's a micro cap. And this is the smallest bank that we've seen, just a little bit bigger than UBFO. And if we're going to look at the share price, this one's bounced up and down a little bit more than some of the other ones, but it's gone from a high of $25 back in February, March of this year down to drop below $10. So it's really climbed, 25%. From that low to $12.46 where it is now. If this bank does survive this banking recession that we're in with the higher interest rates, I would expect it to climb back to that $25 per share area for the past 2 years at least. So we don't see any dividend increases in here, but this one is kind of special because they do something a little bit different. You can see on this chart, instead of actually increasing their dividend and I think pigeonholing themselves into having to make a dividend cut if their income does come down, what they do is they typically pay special dividends. So they'll pay an additional 10 cents here. You could see they paid in Q4 of 2022. They paid it in Q4 of 2021. It looks like they paid 2 in 2021. But yeah, so instead of actually increasing their dividend, what they've been doing is just paying these special dividends. So I think they want to keep their dividends sustainable and not raise their dividend so they don't have to cut it when times get tough. So that's why that chart is a little bit more flat than some of the others. But you definitely have a long history of dividend payments, and it has grown in the past. It's just lately they started this special dividend strategy instead of actually raising their quarterly dividend. And if we go look at the sustainability, we're at a 59% ratio. So that means that about 59% of their current net income gets paid out in dividends over the past year, which is a little bit higher than some on our list. Most of them are around 50%, so this one's a little bit higher. But this bank is, one of the cheaper banks, so it's still down quite a bit compared to previous highs. So I think that the share price has the most room to run, but it has taken a hit in earnings a little bit more than the other ones. All right, that's my list of 5 dividend bank stocks that I'm currently buying. But before I go, I want to talk about the risk involved with some of these companies. So there's really 2 major risks in regional banks right now, and they're both tied to interest rates. This is similar to what happened to Silicon Valley Bank, SVB. So when banks take in deposits, they don't just hold this money in cash. What they do is they lend it out to people in the form of mortgages, credit cards, personal loans, and they also buy bonds. So the stuff that they don't lend out, they buy government treasury bonds with. The thing is, whenever interest rates go up like they have in the past, the value of these bonds decreases. So what happens is that these banks have very large bond holdings in their assets, and when interest rates go up, their bond holdings really crash. It's not necessarily a problem because if you hold the bonds to maturity, you don't actually lose any money. You just collect the interest rate that you bought the bond at. But if there is a bank run, so if a lot of people want to get their money out of the bank and you need liquidity, that's whenever they have to sell their bonds and they can sell them at a loss. And that's what happened to Silicon Valley Bank. So that's the number one risk right now with some of these regional banks. So thanks for watching, everyone. I hope you enjoyed this video. My disclaimer, this is not financial advice. I'm not a financial advisor. This is not a recommendation to buy a security. I'm showing you what I found through my research, and you should certainly do your own research as well. Thanks for watching.